All right, we got plenty of market news to dive into. We just got into aftermarket hours. Been on here since beginning of pre-market hours, regulation hours. We are ready to keep on going. We got a few hours left of trading. Let's get into the market news. Wall Street kicked off the week near all-time highs despite Friday's tech-driven sell-off. Major U.S. indexes lost ground in pre-market trading amid rising volatility early this morning. Tomorrow, February's Consumer Price Index. The report's looming large and could help set this week's tone. The question is whether it will reinforce growing hopes of a late spring to early summer rate cut, or if it resurrects ideas that January's surprisingly hot CPI wasn't just a winter mirage. So that's kind of keeping the Fed on the fence as of right now. The chances of a June or July rate cut rose slightly this past week following February non-farm payrolls report that revealed slower wage growth and sharp downward revisions to December and January job gains. Analysts are expecting CPI to rise 0.4% month over month after a 0.3% reading in January, but see the core CPI, which strips out the food and energy, up 0.3%. Now, that is slower growth than the 0.4% the prior month. And it can go back and forth. This could also be revised. Just as the prior months were revised, this could be revised as well. So, though major U.S. indexes fell this last week, sliding yields and slipping dollars supported small cap stocks, helping the Russell 2000 index and the SPX Equal Weight Index. It might also be a healthy sign that the rally is broadening beyond the biggest names. Futures based on the S&P 500 index fell 0.4% shortly before the close of overnight trading. Futures based on the Dow Jones Industrial Average fell 0.4%, and futures based on the Nasdaq 100 dropped 0.5%. The 10-year U.S. Treasury yield inched lower to 4.08%. The U.S. dollar index fell slightly to 102.74 and is nearly to early January lows. The CBOE volatility index jumped to 15.79, and crude oil fell 0.6% to $77.55 per barrel amid lackluster Chinese demand. The Treasury market is also under scrutiny today after the benchmark 10-year Treasury note yield fell more than 10 basis points last week to one-month lows. Recent data generally showed that the economy is softening, and that along the middle-of-the-road testimony from Federal Reserve Chairman Powell last week helped ease Treasury yields. So sectors including utilities, materials, industrials, real estate staples, and financials all outpaced infotech and communication services over the past 5 sessions. In fact, these two previous high flyers both placed in the bottom 3 sectors over that stretch. So CPI for this next week, month, all this good stuff. The question heading into Tuesday morning's February CPI is whether January was an exception to long-term downward trend or the start of something more sinister that may delay the Fed's rate cut projections. That's kind of what I was saying earlier. Gasoline prices rose last month and tend to be volatile, so core CPI might be the more influential reading. Annual core inflation growth is seen slipping to 3.7% in February from 3.9% in January, but overall annual inflation growth is expected to be unchanged at 3.1%. So we're going to be seeing today the 3-year Treasury note auction followed by 10-year and 30-year auctions later this week, which may add to volatility. Demand was lackluster in a couple of Treasury auctions last month, and more of the same might raise yields, which travel the opposite direction of the underlying note. So jobs report, with February's 275,000 job gains included, the 3-month average growth is roughly 265,000. That's up from the prior 3 months that included a light November number, which is historically strong. So this is sending a message to the Fed that jobs being created remain hardy, which is great for workers and suggests businesses remain in hiring mode. Generally, a growing jobs market has solid implications for the economy, which helps explain recent stock market resilience. The concern is that margins could narrow if companies' demand for workers lifts wages, but at least in February, and it was the only 1 month, wage pressure eased. So, the jobs gap. One worrisome signal from recent jobs data is growing gap between robust jobs growth in the payrolls report, which surveys businesses, and much slower jobs growth in the household survey, which scans individual households. The household survey slid 184,000, causing the unemployment rate to spike to 3.9%. February's rise in unemployment could mean people need multiple jobs to maintain living expenses that would seem likely given inflation over the past 2 years. Procter & Gamble was rising early this morning after getting an upgrade from Truist. The analyst there was seeing Procter & Gamble benefiting from what he believes is a shift in focus by investors this year to consumer personal goods companies with volume growth. Now, if y'all been watching this channel for a bit, that's what I've been gearing towards lately as well. And I think it's a very safe way to go, especially with how the market has been reacting. Also, earlier today, futures trading pegged chances at 97% of the Federal Open Market Committee, leaving rates unchanged at the March 19th to 20th meeting, according to the CME FedWatch tool. The market prices in around a 23% chance the funds rate will be lower than now after the Fed's May meeting. Chances rise to 73% of at least one cut by June and 91% by July. So as we keep moving along, what we're going to be looking forward to is tomorrow, March 12th, February CPI and core CPI and expected earnings from Kohl's. Now, if y'all like Kohl's and you think they're going to be good, it might be something to look forward to. Now, what I'm going to be looking forward to is on March 13th will be Dollar Tree's earnings. I never really went to Dollar Tree before until my best friend introduced me to it, and I enjoy going to Dollar Tree with her now. So I'm going to be looking for Dollar Tree. If it really drops, I'm going to want to get in. Also on the 14th, Dollar General, which is what I would go to whenever I'm in the South, is also going to have earnings. So one day after Dollar Tree will be Dollar General. They do trade very similar. If something happens to one of them, the other one kind of seems to go in sympathy. So we'll see how that's going to go. Whether they're both going to go up, both down, or they're going to go opposite directions, but maybe trade in sympathy with the other. I'm very curious. I'm very excited about that for both Dollar Tree and Dollar General. And there's Kohl's that have been, I believe they've been closing. I haven't been super up to date on that news, but I know a lot of folks shop there, so we're going to see what that is. I'm not too sure about getting in on that one, but I'm really excited about Dollar Tree and Dollar General. It's just something I really want to get into, and finding all this news all throughout the day. Hope y'all enjoyed it. If you want to see more, go ahead and hit that subscribe button. Don't forget that notification bell, and I'll look forward to seeing y'all in the next videos.